India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. This is, of course, a nice Wednesday morning before the market holiday today. And as you can see, we're all kind of dressed slightly differently. We're going to take you through markets more. I'm Prashant, with me my colleagues Surabhi and Nigel. Guys, hi, good morning.
Good morning. All ready to step into, I think, the 78th year of independence, celebrating the 77th Independence Day tomorrow. And while, of course, we're talking about, all kinds of issues in topsy-turvy markets, I think, hand on heart, we all can say that we've done well. The country has done well over the last 7 decades plus, getting ready for the 8th one soon ahead.
Oh, absolutely. I think no questions about it. Things have only over a period of time gotten better and better, as I hope they continue to.
And the best is yet to come.
Important one.
Well, that is an important marker for the future. Well, let's just quickly turn our attention to the markets then, right? You got a bit of a relief rally overnight in the US. And I think it comes in a pretty appropriate time, because you've got the market yesterday, which looked very, very dicey. I'm talking about the market here in India. Sold off 200 points. And imagine, I mean, if you had not had the kind of close overnight and you probably had a bit of a downer of a session, it would look very, very different. So I'm calling this a just-in-time rally from Wall Street, which perhaps, saves us today. So the S&P ended about 1.7% higher. The Nasdaq was up about 2.4%. All sectoral indices on the S&P ended higher except one, which is the energy index, and that's because oil was down. Russell 2000, which is the small cap part of the market there, that also ended in the green. Now, you had the US producer price index numbers, which confirmed that inflationary pressures were easing in the month of July. Although some people are nitpicking and saying, well, it also sort of brings in some worries on the consumer demand side. But the market took it in a good way. And of course, tonight we will get core CPI numbers. So PPI is important, but of course, the big one is the CPI, consumer inflation numbers, which market hopes will show the same thing, disinflation. And then tomorrow you have the retail sales. And I think this week, I think in terms of high frequency data, even more important than the CPI will be the retail sales data, because, the market really was worried about the growth scare in the US, and retail sales is a good way to assess how the US consumer is doing. A Fed official spoke, and he also said that a rate cut is coming. This is Fed's Bostic, but wants to see a little bit more in terms of data. Although to that point about recession, etc., he says, well, that's not in his outlook, and he's expecting a more normalized kind of an economy in the US over the next couple of months, and no recession. And I think that's important to point out as well. Yields lost about 4-5 basis points. We're about 3.85% on the 10-year. Dollar index lost about 0.5%, 102.6, and oil prices are down as well, nearly 2%. And this is a screen. These are 3 things we can live with as we start this particular trading session, and it's good in that sense. Provides us a little bit of relief and breathing space. Yesterday, and I'll start with where we left off, because we left off in not such a great fashion. The market here did underperform pretty much all other markets. Of course, Nikkei was up 3%. That was an outlier because it was coming out of holidays. But other markets were flat in Asia, etc. But here in India, we had a bit of a sell-off, almost just under 1%. The Nifty broke the 40-day exponential moving average by a small margin. But that's about it. So we need to hold the low of 24,079, the same numbers we've been putting out for the last couple of days. That's the first low. And then the absolute swing low recently was 23,893. So these are the 2 levels that the market needs to defend. Hopefully, it will not come to that. On the way up, the swing high is 24,472, which needs to be broken for the market to gain some momentum from here on. Again, not very far from where we left off yesterday. And above that, you got the 20-day moving average, which is the resistance, which is 24,500, 513 as of yesterday's close, to be precise. The Bank Nifty saw a sharp fall yesterday, and we basically have come back. If you look at the Nifty Bank over the last 5-6 sessions, we left off around the lows, the recent lows. But here as well, I mean, there is hope because of the global picture, but it's the weaker of the two indices. Remember that the Bank Nifty needs to hold 49,659 on the way down, 49,659. And then on the way up, the immediate resistance is the swing high, which was 50,830. I mean, hopefully the market starts higher. The GIFT Nifty will come up on your screen and we're able to build and kind of hold on to some of these levels. Although the picture here, the momentum is broken. I mean, there are lots of themes in the market which still look good. But the point is, it's very difficult to stay long a theme once the momentum is not there. It's very difficult to keep riding that wave if the wave starts to plateau out a little bit. Maybe it's the near term, it's the medium term, but that is something we've seen in many sectors. Defense, of course, PSU defense is a prime example that we've been pointing out over the last several trading sessions now. Surabhi.
Absolutely, Prashant. So, I mean, I think we're getting all right cues from the globe. Most of the Asian markets are up and about, barring China, mainland China, as well as Hong Kong. Those are two Asian markets that are negative. But otherwise, Asia seems to be building on to sort of the green that we saw on Wall Street. So it's not too bad. The dollar is very range bound at around 102.5. Yields are okay. So not too much turbulence from the global front. If you look at the cues back home, I'll start first with the flows number. So as usual, domestic institutions were on the buy side again. They bought in about 1,200 odd crores in the cash market. Foreign institutions sold off for worth about 2,100 odd crores. So that trend is continuing. Lots of earnings came in post-market hours. We're in the last leg of the season. And the mixed picture, Hero Moto has been slightly disappointing. Revenues were a miss, and then it became a top-down miss from there. Apollo Hospitals was in line. We'll be talking to the management as well. Gold financiers were in sharp focus and very diverging trends. So for Muthoot, there's been a very steep rise in provisions. Let's see if the market's willing to look beyond that. But for Manappuram, it seems to be a very steady quarter, including their MFI business. We'll talk to this company as well as we go along on the show. Today is a very interesting day in terms of earnings as well, and I'll watch out for a lot of the PSU names. This is a big, high-flying PSU, boys. Are the numbers adding up or not? There's Glenmark Pharma, but HAL and Masgao Dock are the two numbers that I'll really be looking out for. And the new kid on the block, which has had an electrifying start, Ola Electric, will be declaring numbers as well. The only point is, and this is something that we've been asking a lot of experts as well, whether all the Hindenburg noise, whether the markets completely process that, or is it leaving some kind of a lingering uncertainty? There's a lot of political noise around this as well. The Congress has called for an all-India protest on the 22nd of August. There are different reports coming out, here and there. So let's see. That remains a bit of a question in the background, whether that will lead to some kind of an uncertain environment, leading people to book profits, basically looking for an excuse to book profits, which perhaps is what we saw yesterday, I reckon.
Well, Surabhi, today marks the second death anniversary of the greatest investor here in the Indian markets and the biggest bull, Mr. Rakesh Jhunjhunwala. So, condolences to him as well as his family. But sometimes when I hear these, cautious, these pessimistic views on India, I can just hear the reply that he's going to give, right? Because he's someone who used to not back down, the biggest optimist on the Indian markets as well. So we'll remember him today as well. But let's get back to the markets then. Global cues are positive. We had, the Fed talk that was positive because the speaker out there, the Atlanta Fed chair, said that recession is unlikely and they're looking at rate cuts. That's precisely what the markets want to know, right? But it's a big day for the Indian markets as well because you have the Nifty as well as the Nifty Bank that will play out the weekly expiry. So those are the top cues. Yesterday we ended low and there were short positions that got added. Not so much on the Nifty, but on the Nifty Bank because the index ended sharply lower. The last tick was at the low point of the day. Open interest is up close to around 17%. So there are shorts in the system. And I'll tell you what, that's not such a bad thing. You want some shorts in the system because the FI flows are not coming in there. And if in case, they get trapped on the wrong side, then you'll see a big bounce. But take a look at the FI positioning. In a matter of a week, they have gone from net long, close to around 65,000 contracts on the long side. Now they're net short, and that's the first time that we're seeing that they're a net short all the way since the 18th of June. So after 2 months, you're seeing the FIs are back on the short side. Shorts in the system, not bad, as I always say. Clients, what have they done? Well, they were net short with close to around 50,000 contracts on the short side just a week or 10 days or so ago. From there now, they're net long with close to 90,000 positions on the long side. So clients have typically got it right. And when the FIs are short, when that reaches that 1 lakh, 1.5 lakh contracts, that's when you see a bit of a bounce. So that's the top cue. The PCR, since we saw a lot of call writing in yesterday's trading session, it's moving towards the lower end of the range. It had gone to around 1.1 odd. Now it's back down to around 0.7. We've seen in the past when we go to around 0.65 to 0.7, that's when we see a bounce that plays out. What are the levels you're looking at in the Nifty? I think the Nifty is in a band, this 500-600 point band. On the downside, the 23,800 mark, extremely important that we hold out here. Till that holds out, you'll still have to say that you'll have to favor the bulls till this level is holding out. However, we're unable to get past the upper end of the range, which incidentally is the 20 DMA. So that's the important mark you're looking at. Both these two, well, they're important technical levels that we'll keep an eye out on. On the Nifty Bank, yesterday was a weak session, but the 100 DMA, the last time around as well, we bounced from around that 49,600 mark. So that's the important mark on the downside. Well, on the upside, last week, numerous times we went to 50,800. We couldn't get past that mark. Just one more comment I want to make on the F&O positioning. The number of stocks in the F&O band are now nearly around 16 stocks. And yesterday itself, we had 14 stocks that got added to the F&O band. Sometimes that gives you a view that sentiment is still a little bit cautious. You could see get whipsawed either which way. But for the time being, after a while, I'm seeing 16 stocks in the F&O band. So just want to note that. The trend continues to remain up. 23,800 needs to hold out. Let's see if we can build on to this positive start.
All right, well, lots to track, right? And that's a good summary of everything you need to know. Let's get you quickly some money market views here. This is Pankaj Chitlangia of First Basis who's weighing in. He says that RBI's ongoing intervention has effectively curbed the volatility in the rupee despite pressures from carry unwinding and capital outflows. He says with the dollar index showing continued weakness and the USD INR consistently failing to breach the 84 to the dollar range, there is a likelihood of the price testing support around 83.8 in the coming days. He says the daily close above 83.98 to the dollar is needed to invalidate this outlook.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 6.86 to 6.89% last week. He says the MPC decided to maintain status quo on both repo as well as the stance with a 4:2 majority. And as expected, the July CPI eased to 3.5% year on year, led by favorable base effects. He says the market will watch out for the US CPI data this week. He's expecting the 10-year benchmark here in India to trade in a band of 6.85 to 6.95% for the coming week. Okay, we'll take a quick break on that note, our first on the show. But coming up on the other side, a view on all things global. Neeraj Seth of BlackRock joins in for a perspective on how markets are shaping up.
Okay, welcome back. Well, we're talking global still because a lot of it, of course, what's happened over the last fortnight or so is global. Neeraj Seth is with us. He's the Chief Investment Officer, Head of APAC Fundamental Fixed Income at BlackRock. He's with us here in our studios. Neeraj, pleasure to have you with us here. Thank you very much for your time.
Thank you.
I think the question remains unchanged, even though we've spent some time in more calmer kind of waters over the last few trading sessions now after that big panic and scare towards the beginning of last week, Monday especially, Monday and Tuesday. Do you think we've put all of that behind, or there is perhaps a summer saying, usually it never ends with just one, there's something coming, another wave of panic shortly which follows thereafter?
So I think what we saw last week, you can put that behind. It's not over. There's potentially going to be more volatility, but are we going to see that in the immediate future? I don't think so. And two important factors there. One, obviously, the markets have started to move towards pricing in the Fed cuts. Now, it's more about the data. What we see from here in the CPI report today or the claims report tomorrow, or the most important, in my view, is the NFP. So I think the markets will look at that pricing of the Fed cuts and how to think about it. And the second is the Bank of Japan. Now, big shift was the Deputy Governor Yoshhida's speech, which to some extent has put the future hike expectations on pause for now. Is it over? I don't think so. But at the same time, would they try to hike in rest of the calendar year? The probability is low.
Is a rate cut good or is a rate cut bad now in the US? Because this Goldilocks, just right amount of disinflation, immaculate disinflation, and the Fed allowing the Fed to cut. I mean, does it happen in the real world? I think
it can happen. It doesn't happen every time. If you look at last 50 years, obviously you have had scenarios where it started to gradually slow down and then it accelerates from there, whether it was in 2000, 2001 or in 90s. And 2008 was slightly different scenario given the Lehman bankruptcy and you had a sharp fall down. Now, where we are today, if you look at the US growth and the data, it's slowing down gradually. You're seeing the consumer slowing down. You're seeing the interest rate sensitive sectors slowing down, but you don't really have a big macro risk sitting on the horizon like some of the previous crisis situations. So I think the rate cut is good with a gradual slowdown. If you see an abrupt slowdown for some reason and you get a bigger rate cut, that bigger rate cut will be a negative in my view for the risk assets, because that will actually reflect a much sharper drop in the economic activity, which is not the base case today.
So just to take that point forward, Neeraj, let's work with the former scenario that you get a gradual slowdown and rate cuts which are fairly paced and not dramatic. In that scenario, what happens to risk assets? Is it positive equities? Is it more positive bonds? What do we expect in this gentle deceleration?
So I think it's to some extent positive equities, but if you look at the equity valuations, they have priced in the soft landing. So if the base case scenario is priced, the upside is somewhat limited, but it don't have a lot of downside risk from here. But it certainly is very positive for fixed income and for the bonds, because there, when you think about the rate cuts, two things will happen. The one, obviously, you get the benefit of rate cuts in the fixed income. The second, which is there's a lot of money which is sitting in the short end of the curve. So money market funds at 8.8 trillion, you have close to 4 trillion of the ownership of the short treasury bills. Some of that money trickle back into duration or risk assets in credit. And credit does well in that slowdown scenario. So I think for credit, it's a positive backdrop.
Okay, and just to complete the point on credit, I mean, up until I think last week, if you were here with us, we would be asking you, what's happening because the BOJ is hiking and the Fed is cutting. At least that's off the table. We all know that, we'll probably get this pause from Japan as the US gets into the gentle cut regime. So a point on the yen carry, I mean, you just said that this whole scenario is very positive in general for the US bond market. What about the yen carry? Is that tantrum over and done?
So, well, you saw a lot of cleanup. Now, I don't think it's 100% cleanup, but I've seen estimates that have now gone to 60 to 70% of the carry unwind that happened. So you've seen some of that cleanup. My base case is if the BOJ stays on pause now, the interest rate differentials come back in play, I think very gradually the markets will build up carry. But given the higher volatility, you will not have the same extent of buildup that we had going into last week's situation. So yes, you will see some buildup. If I have to take a base case, I think the dollar yen drifts higher from here.
All right. Hi, Neeraj, and good to see you in the studio, Neeraj. For an India market perspective, inward, everything is looking good. We have earnings, stable government policy as well moving in our favor. Valuation-wise, well, that's debatable because we're not too cheap. But in terms of external cues, we already spoke about central banks. I wanted to ask you about the next big cue. That's the US presidential election. What's going to be good for Indian markets? I mean, what could derail it? Will Trump be better, or do you think otherwise?
So it's hard to say because a lot of it depends on what the policy outcome is, not the person. Right. And it's very difficult to speculate where you're going. But I actually think if I look across the world, India is probably one of the markets which will be less impacted relative to other global markets, regardless of what the election outcome in the US is. Because the domestic story across the secular, structural, cyclical, geopolitical, all of those actually aligning is going to remain positive. So yes, there will be impact, but I think India will be a little less impacted than a lot of other global markets.
Just a word on politics and local politics here, because what's happened, I think, in the last 3-4 weeks since the election outcome is that political rhetoric, political posturing, political noise has really increased here in India. Does that worry you from a foreign investor standpoint?
Not really, and not at this point unless something changes in terms of the policy continuity. So what we saw, the most important focus after the election outcome was the budget, fiscal consolidation, infrastructure spend, inclusive growth. I think that balance has given some confidence that the government still means business. They still actually are focused on the growth path for the foreseeable future. Now, if that changes, if you see a significant shift in terms of the path of fiscal consolidation or the composition of fiscal, which is 65-70% going in capex for infrastructure build, I think that will worry investors. But today, looking at that, you're getting reasonably good macroeconomic stability. INR, despite a little bit of moves here and there, is stable. I'm not too worried about it.
Before we hit air, Neeraj, you were talking about, you used the word late cycle. When you say late cycle, you mean this global risk-on kind of cycle, right? And so there you're in the late stage? I
would say from more so the developed market. And one thing I would qualify, when you look across the globe, from an economic and monetary policy perspective, we have not seen this level of lack of synchronization in the world. You have central banks trying to cut, your central banks who want to cut but are waiting for the Fed, your central banks trying to hike. It's just all over the place, and with a very, very different economic and monetary policy cycles. But specific to the US, Europe, UK, some of the developed markets, that's where you're seeing that late cycle dynamics.
All right, fair enough. Neeraj, we'll leave it there. A short conversation, but love to have you, sort of here again every conversation if possible, but at least once a month. Thank you very much
Absolutely.
once again for joining us from our studios here. We'll take a quick commercial break here. So that's the global stuff. We won't take a break. What we'll do is we'll talk about individual stocks and sectors with a research team. There's lots to get by. Earnings season is winding down. Nigel, why don't we start with Vedanta and Hindustan Zinc?
Well, that's right. Everyone's waiting for the government of India to go ahead and sell stake via the OFS route in Hindustan Zinc. Well, Mr. Agarwal, he does something again that, yeah, he beat them to it. So, and Nimesh had mentioned this as well in D-Street Chatter, that this could be a probability that takes place. So the news basically is that Vedanta is looking to sell close to 2.6% stake via the OFS route in Hindustan Zinc. To give you a shareholding pattern first, Vedanta as well as the government of India, they have 95% stake in the company, and LIC is the remainder. So basically free float is very, very limited at around 2.5%. What can Vedanta get? Well, if they sell that 11 crores at current market price, they'll get close to around 6,400 crores. But this pricing is likely to be much lower because as of now, Hindustan Zinc, because of the limited float, is trading at around 13 to 14 times, assuming the EBITDA number of around 17 to around 19,000 crores in the next 2 fiscals. So the pricing will be a little bit lower. So in all probability, Vedanta could probably realize close to around 5,500 crores or thereabouts. For Vedanta, it's positive. Why? They can give dividend, they can repay some debt, and they can also fund their capex. So green on Vedanta, and in fact, we've seen some shorts build up into the system as well. So I expect that stock to gap up. Phillip Capital, they have gone ahead and they have said that they're expecting a 4 to 5% up move based on this news piece. So positive on Vedanta, and Hindustan Zinc, well, little correct because this deal is like to be done at a bit of a discount.
Okay, so Vedanta in focus for sure. Let's move on. The next one on our radar is going to be Hero Moto. The company declared numbers yesterday after market hours. Sonal, how did they look?
Well, these are good numbers on a YY basis, but earnings were below what the CNBC-TV18 poll suggested. EBITDA margins, they were impacted because of higher raw material costs, and realizations, they grew just 2% on a YY basis. To take you through the YY numbers, the revenues were up 16%, EBITDA grew 21%, margins were up 60 basis points, and profits were up 36% as well. However, all these numbers were lower than the poll or the street estimates. In terms of outlook, the management says they have witnessed positive trends across domestic, EV and global business, optimistic about demand trajectory in coming quarters, and now focus will be to build their premium segment on the back of new launches in the past quarters. With inflationary pressures easing, consumer spending power is set to rise according to the management. But remember, the stock is already rallied ahead of numbers, so we could see some red today.
All right, thank you very much, Sonal, for that. That's Hero Moto in focus. Max Financial also reported numbers. Yash is here with details. Yash, morning.
Morning, Prashant. So I'm going with red on Max Financial Services because on one hand, when the top line performance of the company in the first quarter came bang in line with what we were anticipating in terms of estimates, but there was a sharp gap which came on value of new business as well as the margins. So as far as new business premium is concerned, that came in at about 2,075 crore rupees, as I said, in line with what we were anticipating. Total APE came in at about 1,453 crore rupees. Retail APE came at about 1,260 crore rupees, but the gap that I'm talking about, value of new business, that came in at about 254 crore rupees. What we were anticipating was about 285 crore rupees. The gap just widened further when it comes to margins. The margins came in at about 17.48% versus estimates of about 21.46%, which means a near 400 basis points gap when it comes to margin. That's going to be, trouble for the company. Of course, the margin miss has come largely because of a strong growth as far as the ULIP business for the company is concerned. Largely, the new business premium on a year-on-year basis was up 12%, total APE growing at 31%, retail APE growing at 27%, and margins on a year-on-year comparison came down by about 472 basis points at 17.48% versus 22.2%.
Okay, all right, got that. Thanks very much, Yash, for Max Financial. Let's look at the other important number that came in after market hours, and that is Apollo Hospitals. We have Ekta breaking it up for us. Ekta, how are the numbers?
Thanks for that. Well, Apollo Hospitals was an inline set of numbers. The street was anticipating a 15% revenue growth. That's what they reported. They reported a 15% revenue growth. Margins in line with estimates of around 13.3% and a profit which was better than estimates at over 300 odd crores. Now the hospital revenue, which is their bread and butter, was up 15%, but the average revenue per occupied bed was up only 2% year on year. Compare this to around a 12% growth that they reported in the previous quarter. Diagnostics, the margins improved to 9% versus 7%. Apollo Health Co, which houses Apollo 24/7, the EBITDA was 22.5 crores versus a loss of 56 crores year on year. And the Apollo 24/7 Q1 GMV was up around 9% year on year. So overall, all the statistics look good and largely in line with Apollo, with the estimates. But I would just watch out for commentary with regards to the average revenue per occupied bed.
Okay, in fact, we'll have the management joining on later on the show at around 9:40 a.m. to detail their Q1 numbers. But let's hop across to Vamakshi. She's here to tell us about Muthoot as well as Manappuram Finance. Morning, Vamakshi.
Well, good morning, Nigel. Let me first start off with Manappuram. Gold loan saw a very strong growth of almost 15%, and management has in fact gone ahead and raised their guidance to 15% loan growth in the gold segment for FY25. Non-gold loan AUMs too was sharply higher, almost 30%. NII came in slightly lower than what the street was expecting, and that is mainly on account of lower interest income. NII saw an uptick of 19%. PPOP, however, was higher than what analysts were expecting, and that is mainly on account of lower OPEX. Provisioning came in slightly higher than analysts' expectations at 228 crores. Net profit, however, saw an uptick of almost 12% and came in nearly 4.5% higher as compared to analyst estimates. Asset quality for the company was also largely stable. GNPA saw a small uptick of 16 basis points sequentially, and NNPA was largely flat on a sequential basis. So overall, going with a green for Manappuram. But on the other hand, going with a red for Muthoot Finance, there's no complaining about loan growth here because we're seeing a 25% uptick on a YOY basis, 11% sequentially. NII too was in line with largely what the street was expecting. NII came in at 2,305 crore. NIMs have contracted marginally both on a YOY as well as sequential basis, but it is the asset quality that is a bit of concern for Muthoot because the GNPA has deteriorated by almost 70 basis points sequentially. Provisionings have seen an uptick of almost 160% on a sequential basis, and because of higher provisioning, there's a miss on the PAT as well. PAT came in only 11% higher. So overall, going with a red for Muthoot Finance, mainly on account of concerns around asset quality.
Okay, well, you'll hear from the management of Manappuram a little later on the program. So Mr. VP Nandakumar, MD and CEO of the company, with us to take questions as to what the outlook looks like. Vamakshi, thank you very much for that. Let's move on, though, and talk about Nykaa as well, which reported earnings. Mangalam is here with that one. Mangalam, morning.
Good morning. So, it's been a weak consumer sentiment, and as a result of which the company in that has reported a decent performance. It was a tough quarter, and the net profit has jumped on a low base. So 23% growth in their revenues. The EBITDA has actually seen a 31% jump. Margins have improved by about 30 basis points, the reported ones. And the net profit has jumped all the way from 5.5 crores to about 14 odd crores itself. The beauty business, that showed a revenue growth of 23%, margins of almost 4.6%, so EBIT growth of almost 25%. Fashion showed a revenue growth of 21.5%. And out there as well, the contribution margins actually improved. So beauty GMV was 28% higher, but the company had to give a fair amount of discounts, etc., which is why revenues are around 23% higher. And fashion contribution margin, even though it's an EBIT loss-making business, they are focusing on profitability, and contribution margins have improved by 600 basis points. And the superstore business, which is their B2B business, showed a 72% jump in GMV. So put all this together, along with the fact that the stock was down 4.5% yesterday's trading session, see a bit of green on Nykaa today.
Okay, all right, got it. Thanks very much for that, Mangalam. Let's move on and look at some more names. I think we've got Vivek now joining in because we've seen earnings from GMR Airports, also SJVN. Vivek, morning. Take us through the numbers.
Well, good morning. GMR Airports, operationally decent set of numbers, but on the bottom line, there was a loss reported, and the company has explained the multiple one-offs. First up, let's have a look at how exactly the operations panned out. Revenues higher by close to 19%, a little over 2,400 crores is where the revenues came in at. EBITDA, the core EBITDA was higher by 19%. Margins are staying flat on a year-on-year basis at the 37.3% mark. However, on the bottom line, the company saw a net loss of close to 340 crore. What impacted the bottom line? Number one, finance cost costs this time were much higher, coming in at close to 890 crore versus 576 crore on a year-on-year basis. The company says this includes payments on account of forex fluctuation in the FCCB payments towards ADP. Also, the depreciation this time around was much higher at close to 466 crore. Also, remember, the base quarter actually had a one-time gain of close to 76 crore. Apart from that, the company has also taken an enabling provision for raising close to 5,000 crore either via the QIP route or the FCCB route. The second stock is SJVN, a very strong operational quarter, higher PLFs, higher PAF, both aiding the profitability. Revenues higher by 29%, coming close to 870 crore mark. EBITDA higher by 32.5%. Margins very strong, 76.7%. Profitability on the back of that higher by 31.5%. The gross power generated by the company was up 56% on a year-on-year basis and up almost 3.7 times sequentially. Also, there was a 14% increase in installed capacity as far as the company was concerned. Remember, one board approval coming in, the company is looking for dilution of stake as far as HJV and green energy is concerned, and that will also be an important trigger to watch out for going forward.
Okay, all right, got it. Thanks very much, Vivek, for that. We'll watch out for those stocks as well. So here's a quick recap of the list this morning. Stocks that have positive news flow around them are Vedanta, Apollo Hospitals, Manappuram Finance, Nykaa and SJVN. Stocks with negative news flow around them, Hindustan Zinc, Hero MotoCorp, Max Financial, GMR Airport and Muthoot Finance. All right, we will take a quick break on that note. Up next, we discuss some of these movers and shakers with Deven Choksi of DR Choksi FinServe and get some fundamental ideas.
Okay, welcome back. We've got, 30 minutes to go for the pre-open session. There is a lot to sort of get by, lots of results, reactions, etc. Let's kick it off with the first one. So we've got Borosil Renewables in focus. First quarter was a muted quarter. The losses have widened. EBITDA is down on a year-on-year basis. Margins have also contracted. Mr. Pradeep Kheruka is Executive Chairman at Borosil Renewables. He's with us to take us through what happened and how things look. Mr. Kheruka, good morning. Great to have you with us here. Thank you for your time. So, contextualize the numbers that we just seen for Q1. You got help from the budget in terms of reimposition of that duty, which I think we did speak about right after the budget. Maybe that will show up in the forthcoming quarters. But what really happened in the quarter?
So actually, a number of things happened in the quarter, chief amongst which was I'd say that the quarter that just went by was better than the one before that, and therefore we are hopeful. One of the things that happened, which was not expected, was that there was a shortage of shipping space between China and India, and that led to a rise in ocean freight. So landed prices rose, and with that, our selling prices rose by about 6%. That was helpful in reducing our losses, and the losses stand quite reduced now, and we're looking forward to a positive quarter, which is an ongoing quarter, and we expect that things will look up from now. The government's decision to withdraw the exemption is kicking in from the 1st of October.
1st of October, yeah. And you will have that help. Just to complete that point, what is the cost for sort of moving a container, freight costs, between India and China? You said it had risen to about $3,500. From
$700, it went up to $3,500. It's back again to $2,000. And these rise and fall like the stock market. But anyway, that is what it is. But the other big thing that has happened is that the government had implemented the ALMM order with effect from the 1st of April, and they have been enforcing it, which means that for a wide variety of applications in the country where government funding is involved, modules must meet a certain technical specification, which is designated by ALMM. And so far, only Indian companies have been certified under ALMM, and therefore, the demand for Indian modules has risen very sharply, and that we can see in the sharp rise in demand for Indian glass. So that has improved a lot.
Sir, Mr. Kheruka, so let's get some idea in terms of timelines and numbers. So the first quarter, you have a loss of about 14 crores. You're saying things will get better and then the customs duty relaxation also kicks in. So what should we expect? I mean, by when do you go back in the black? How is Q2 shaping up? And give us an outlook for the entire year as well. I mean, how will you be on the top line? And for the year as a whole, what can we expect at the profit line?
You see, I'd say that you asked a number of questions. I'll try to answer them all. The first question is, what are we expecting going forward? The answer to that is that I never make forward-looking statements, but I would say the last quarter, which we just saw, for which I gave the results yesterday, should be the last one. Should not be. The ongoing quarter should not be like that, which means that it should be in the black. That's what I'm looking for. Looking at the month that went by, the month of July was quite promising. And if things continue like that, then we should be in the black in the current quarter. And that is, mind you, without the kicking in of the import duty. Once the import duty kicks in, it's going to be even better. In Germany, because the losses of the Indian operations were not that much, what you just said, it was contributed by the German operations. And in Germany, we have just implemented a new glass processing line, which should be it should be much less in terms of the costing. And so that should reflect on the numbers. And we have made great strides in exporting glass from Germany. Meanwhile, the European Union had allowed from at the union level to allow solar component and solar module manufacturers to be given various help from the government, things like tax breaks and so on, which would incentivize a homeowner to use a domestically made module as compared to the imported one. Now, these regulations have come into France, in Italy, and in Austria. So if you're living in one of these three countries and you use a European-made module, then you get a big tax break, which really reduces the cost of ownership. And this would be something new. So we think this is going to launch a big spurt in the demand for rooftop solar, which will reflect on our glass, our German glass. Germany is yet to make this transition and to announce. Maybe they are still working it out, what they want to do. These things take time, and hopefully they will be done with it in a while. And with that, we should be able to find a big boost in our sales to German customers.
All right. Hi, good morning, Mr. Kheruka. This is Nigel on this side. You know, the last few times we've interacted, you have been saying the government needs to put some action in. And it's good to see from your business perspective that BCD has come back in, and second half of the year could look much better. So the European piece, let's keep it aside. Let's focus on the India business, which is bulk of your revenues and bulk of your profitability. One positive I look at in your standalone numbers is that margins have gone back up to double digits. And quarter two, your second half of the year will be far better. So do you get to those high teens or 20% plus margins in the India business? Realizations have moved up. You have some protection as well. Is that a possibility?
That is a possibility.
20% plus standalone margins. What you were doing not too long ago, sir.
I would not make any statements myself, as I absolutely refuse to do at all times. All I can say is that we are today just about able to turn a profit. We are a whisker away from turning a profit in the Indian operations. And if 10% comes in, that will just go straight to the bottom line.
All right. And
yeah.
Got it. So then second half of the year is looking better. And very quickly, you have some fundraise plans as well, 450 crores. The rights issue, when does that take place? When should we hear about that? You had mentioned that you want to reduce debt to around 200 crores, I think, post this fundraise. So quickly, if you could wind it up with that.
We have been tossing up so many, it's a dynamic situation in which we live. And the rights issue of 450, the board has approved. We already have approval from the stock exchanges. There are some other clearances we need. And once that is done, I think by the end of this month, we will be having a better idea of how the finances are looking, because we don't want to overborrow. We don't want to over raise capital. So that still remains to be seen. But we've taken the permission for 450.
Can we annualize the 370 crore top line, or will it be much better?
I would not like to. The top line of 370. You see, if the 10% duty comes in, selling prices move up 10% straight away. So if that happens, then the 370 obviously will need to change. Need to go up. Yeah.
And this tariff between India and China, it is Chinese imports or Indian exports from here, because higher tariffs should have also prevented cheap Chinese imports, right?
Well, China, these are tariffs imposed by the Indian government. Now,
no, I'm talking about the freight rates, very high freight rates in the quarter.
Yeah, the freight rates we don't. I mean, nobody. There are very few exports to China from.
Exactly. So it should have prevented very cheap Chinese imports as well, right? So, but that obviously did not help.
No, Chinese imports. Chinese imports were coming in at $700 a container. It's now about $2,000, and this problem has been occasioned by the extra time that is being taken to reach Europe and the United States. If you want to go to the Atlantic coast from China, you have to go around the Cape of Good Hope. The Suez Canal is no longer an option. And likewise, for shipments to Europe, you have to go around Africa. So the amount of time spent on the water by containers is 3 times longer than what used to be. So obviously, there's a shortage in supply.
All right, Mr. Kheruka, thank you very much. Sorry for rushing you, but it's always great to speak with you early on and get a sense of the numbers. And good luck to you as you sort of move forward. Devin Chokshi is with us. Devin Chokshi of DR Chokshi FinServ. Devin, good to have you with us here. Thank you very much for your time. I mean, as we begin today's session, we got a bit of help from Wall Street after yesterday's pretty disappointing close. What's going on, Devin? It looks like in many sectors, momentum is kind of broken. Here, right? I mean, this sort of non-stop, just one day break and then market starting to move up. That's kind of behind for some sectors. Are you noticing that as well? And what would you do?
Yes, Prashant. Good morning. Absolutely. Not very surprising though. I think this particular momentum had to break, largely because of 2 reasons. On one side, you have already higher base effect now kicking in. As a result of which, I think the visibility for growth is probably, I think, not as strong as I think it was there last year. Obviously, I think the growth premium which was given by the players in the market, I think that is now coming down. And that's where I think you're seeing a sharp cut in the stock prices, individual stock prices. Many of the metal commodity companies, I think you've seen a sharp correction in the stock prices. You have also seen sharp correction in the stock prices of some of the mid-cap, small-cap companies where I think they have not lived up to the result either. So all these points I think are coming in together, and as a result of which correction is happening. We are prepared for it because I think we always had this particular understanding that I think moment the high base effect gets into the system, I think the growth rate tapers down, and as a result of which I think the companies will not be able to command the significant premium that they've been commanding up till now. At the same time, I think there is zero chance for anybody to make a mistake in the working of the company. Moment I think you bring, I think, a little lower than the expected result, I think the market is ready to punish you. So these factors have already started playing its role. I think this correction of a sharper degree in some of the quality fundamental stocks, I think could be a good opportunity going forward for those investors I think who want to build their portfolio with a solid long-term fundamentals.
All right. Hi, Devin. Good morning. Since you briefly mentioned metal stocks, what about Vedanta? Mr. Anil Agarwal finally seems to be getting his house in order, and he's making the moves which are shareholder friendly. The problem for is that the global piece has gone a little bit, into a bit of a tizzy. Demand is softer, prices have come off as well. But Vedanta will get closer on 5,000 crores at least if this 2.5% stake sale that you're looking at by the OFS route in Hindustan Zinc goes through. Your view on it, because 5,000 crores is a lot of money, which can be used for debt reduction, paying out dividend, or even fund their capex.
Yes, absolutely, Nigel. Good morning. Well, I believe that I think in particular the Vedanta story looks I think more firm than ever before. They have been trying to correct their balance sheets, and I think they have been succeeding with one after another move. I think this one also appears to be I think a very successful move. I think should it get completely executed. Probably I think this would create cash as you rightly observed. But more importantly, on the other side, I think each of their metal assets are earning good amount of money. If you look at zinc business, I think they've been showing distinctly high amount of growth. The prices have improved. So yes, I do agree that internationally the prices may have softened in some of the commodities, but in the white metals in particular, I think the zinc and the silver both, I think they are having significantly large amount of contribution to get into the balance sheet. So I would even relatively firm about Hindustan Zinc's prospects going forward. Vedanta, of course, I think once the restructuring gets completed, one will have to look at afresh. But as of now, I think both of them are relatively steady, and the stock prices should also perform better going forward.
Okay, all right. Sounding positive on Vedanta. Let's talk about Hero MotoCorp then, Devin. What do you make of the numbers? The stock has done fairly well in the recent past, but how would you view the stock from here on?
Yeah, maybe I think some softening of the margin in this particular quarter has been experienced for this company. And probably that creates a differentiation between the strategy of Bajaj versus Hero, wherein Bajaj is constantly trying to get into the premiumization product and constantly move into that particular space so that the margins are also protected and at the same time the better numbers get reflected on the bottom line. Whereas in case of Hero, I think the legacy portfolio does affect them as far as I think the margins are concerned. But if you look at, I think, one of kind of a situation on a quarterly basis, I would believe that I think the margins are likely to remain steady. This year, the cost pressure, particularly for most of the OEMs, I think from the ancillary side, is going to be lower comparatively because of the better behavior of the metal commodity prices. Should that be the situation, I would like to think that in subsequent quarters, the margins would remain protected. And at the same time, around 6-7% kind of a market growth in the business is not ruled out two-wheeler segment. So should that continue, in my viewpoint, I think this particular business will remain a steady performer, with an exception to Bajaj, which is basically moving with the right kind of models, I think, which they're bringing. They may probably, I think, show relatively stronger performance compared to other peers in the market.
Okay, all right. Devin, stay with us. There's 12 minutes to go for the pre-open session. What we'll do is we'll take a quick commercial break here. We're going to come back in just a bit. Mitesh and Sudarshan are going to be with us with their technical trading ideas. That's coming up in just 2 minutes.
Welcome back. So let's get to our technical experts and see what kind of trades you can perhaps work with today. We have Mitesh as well as Sudarshan with us now. Gentlemen, good morning. So we had a bit of a drubbing yesterday, down day today. Global markets are at least holding up. Let's see what we do. So Mitesh, let me start with you. What would the advice be? Would you like to buy after yesterday's fall, or would you stay on the sidelines, at least in the initial part of the day?
Good morning. So I think, the structure for me is negative. Now, what has happened is that we did, fail to get past the 50% retracement level and then started tapering off. And today will be a slightly positive day. I think a good way to approach this market would be to look at bounces and identify levels where you can either buy put options or even sell in the futures market. So for me, I think that's closer to about 250 to 70 zone on the upside. And in case we get there, then I think that's where I would want to take some short positions. Even on the stock side, these buys and tilt is slightly on the negative side.
Okay. And Sudarshan, morning. What is your approach to the market after yesterday's fall?
Yeah, good morning. Yesterday was an avoid day, and the idea was not to trade. Now, and that is significant because on some days, not trading itself is a trade. But today, I was saying that an early morning dip would be a buying opportunity. Again, this is an intraday trade. The overall structure of the market is that we are in some kind of a correction. Now, corrections are very difficult to trade on the long side and on the short side both. So we have to focus on the bigger trend. The bigger trend is up. We are in a correction for a day. Whenever a buying opportunity comes, take that. Otherwise, keep away. Today, on an early morning dip, an opportunity should come with a 100-point stop loss.
So looking to buy the dip. Got it. So Darshan, let's also come to stocks. Individual names, what are you trading today?
Sure. Hindustan Copper is a buying opportunity with a stop under 280. Federal Bank is the buy with a stop under 190. My only intraday short is Zydus Life Sciences, intraday short with a stop above 1290. And Havells is finally a buy. It's also a positional trade and an intraday trade with a stop below 1740. Traders must remember today is also Nifty weekly expiry, so expect volatility.
Okay, fair enough. Yeah, good to take that on board as well. Mitesh, let's come to you. Individual stocks, what are you working with?
I have a mix of buys and sells. Indigo, I would want to sell if it breaks 4200 with a stop at 4270 for targets of 4035. After a long time, the chart shows some corrective signals here. TVS Motors is a buy with a stop below 2600 for a first target of 2700. A buy on Berger Paints for targets of 550 and a stop at 528. And Dabur is a sell as well. Keep a stop at 615. Look for targets of 590.
Okay, all right, Mitesh and Sudarshan, coming back to you for more, guys, a little later. But thank you very much for that. We'll take a quick commercial break here. We should have the pre-opening rates with us, but we'll also have Satish Pai, Managing Director at Hindalco, to put the focus on their first quarter earnings. So that's coming up. Stay tuned. Welcome back. So we are sort of a couple of minutes away from the pre-open session. We have lots to discuss. So Mitesh, of course, is with us as well. Mitesh, you know, so many single stock, so much single stock price action, big moves, right? So let's just get through 5-6 names quickly. Aarti Industries, Mitesh, big 15% cut yesterday, huge volumes. Where does it find supports, and is there anything one can do here?
So, Prashant, I think, you know, the stock with that negative management commentary had a big correction, and the bar is suggesting that there should be follow through on the downside. So the stock chart was pretty good, but a gap down and a big bar suggests that the levels of 595 should be the minimum which the stock can do. And in case we start breaking below this 595, 590 zone, then there is a good chance that we might even see 575 odd levels. So the structure is negative, I think, with that fall yesterday. I think in case you get a bounce back to about 650, 645 levels, try and exit if somebody's stuck.
Zydus Life, Mitesh, briefly, I mean, the high was about 1350. Quickly, it's come down to about 1180. 2-3 days. Is starting something new on the downside? Huge outperformer for the year.
See, again, I think, you know, I think it's a very simple pattern of stock, you know, showing signs of profit booking. I think it's broken the 10-20 day average and it's now at a pivot area of around 1170. If that breaks, then I think this correction or this pullback could extend to about levels of 1120, 1110 on the downside.
You know, any of these, by the way, any thoughts on, I know there's no history, price history, but Ola Electric, right? I mean, superb. Last 3 days now, so really can't go with 3 days of price action. Senco, you know, the Inox stocks, Inox Wind and Inox Green, anything here? Big moves.
See, I think, you know, I have been tracking only Inox Wind, and that stock, I think, you know, gave a big breakout around these levels of 180, 190. And since then has been in an uptrend. Now, yesterday we did get a gap up, but then the closing was slightly on the weaker side. But for me, the structure is good. So I think in case you get the stock back to about 195 or levels, 195 200 zone, buy here again with a stop at 188. And I think the highs of 235, 236 should be not only retested, but also crossed on the upside.
All right, Mitesh, thanks a lot for that. We'll come back to you when market opens to get your fresh take on the opening as well as the stock at 9:10 a.m. For the time being, let's focus on Hindalco. Posted a good set of numbers, aluminium business as well as copper business. Both of them, the EBITDA number came in better than what the street was working with. To discuss the past quarter and more importantly, the way ahead, Mr. Satish Pai, the Managing Director at Hindalco, joins in. Hi, Mr. Pai. Thanks a lot for joining in.
Well, the aluminum prices saw a big surge, and that was the benefit you got in the past quarter. But now global demand has pulled back a little bit. What is the range you're working with regard to aluminum prices from here on?
See, I don't think I'm going to change my range. I think it's going to be between 2200 and 2400 on an average. As you rightfully said, depending on macroeconomic or geopolitical events that happen, you see spikes in the commodity price, and then they sort of correct down. So it's going to be a fairly volatile period for all commodities in general, because the world is in a fairly volatile state. So from a guidance point of view, I would not change my guidance and say that aluminium is still going to be in that 2200 to 2400 range.
Okay, fair enough. Sir, let's focus on the aluminum business. And you've focused on the cost side, which seems to be working really well. But then prices have seen a sharp decline, aluminum prices, that is. So what is the kind of EBITDA per ton that we can perhaps work with from this quarter's number, which was close to 1250 per ton?
So I think that honestly, you could assume that in Q2, the costs will be flattish with Q1. So if you lose $100, $200 from the top line of the LME, you would see that negative reflected on the EBITDA per ton as well.
Okay, all right. So maybe $100, $200 per ton pullback. But I think if you derive the number, the aluminum EBITDA per ton will still be over $1,000 per ton. Got that. Let's focus on copper. Copper EBITDA has broken out that 550 to 600 crores in a quarterly basis. Now, since you've delivered 800 crores in the first quarter, what's the new copper EBITDA run rate, so to call it, on a quarterly basis from here on?
So I think I'm going to be again very consistent and say that our guidance remains at around the 600 crores. What happens in copper is that because of derivative hedge accounting that we do, because it's offset hedged, you do get some positives and negatives. So fortunately in Q1 it was positive. Sometimes it can be negative. So I would say that our sort of normal run rate for EBITDA for the copper is more around 600.
Okay, so since we're done with the India piece, let's focus on Novelis. The EBITDA per ton was at around $525 per ton, but you'll get hit by around $30 million due to the flooding. That's in the second quarter. So what's the outlook from here on? And Mr. Pai, in the past, numerous times you've mentioned, at some point of time, you see this EBITDA per ton in Novelis go to $600 per ton. When is that?
So I think that first, to answer your question, and you actually did the math correct, we have roughly a 30 million EBITDA impact because of the CF flooding. And you will see that happen in Q2. So if you take the sort of baseline $525 per ton, 500 million a quarter EBITDA, you are going to see that 30 million hit coming in Q2. The second part of your question, when will we see the 600? We were always very clear when Bay Minette gets commissioned. So Bay Minette starts to get commissioned by sort of September of calendar year 26. So that's when you will start to see that EBITDA jump, because new volumes come in with a much better cost profile in Bay Minette.
Okay, so we'll wait by for that. So what about the IPO? I mean, there's been a lot said on it, back and forth on whether the IPO is happening or not happening. So what is the current situation? Has it been cancelled completely, or have you postponed it?
So we were very clear that the Novelis IPO was being done to realize a premium valuation for Novelis. We were not short of cash in India. As you know, our net debt to EBITDA is negative. Now, when we went for the IPO in June, the market conditions were such that we could have done the IPO, but we would have not got that premium valuation, which is why we decided not to do it. So we will continue to assess the market conditions. We still plan to go back to the market, but we will do it when we are sure we are going to get that premium valuation.
Okay, all right. So we'll wait by then for further clarity on Novelis. As you're saying, you're being a bit of an optimist out there and taking, looking at premium valuations on Novelis. Let's focus on the balance sheet then. What is the capex that you've lined up for this year, as well as the debt?
For Novelis, you had guided that you'll be at the lower end of the capex that was earlier guided. For the India operations, what will it be for this year?
So I think that the lower end guidance was given for the Novelis capex because they were guiding at the initial part 1.3 to 1.5. They are now saying that they're going to be at that lower end, which is $1.3 billion for this year. I think on the India side, we had guided 5,500 to 6,000, and we are going to be in that range. As you rightfully pointed out in Q1, a little bit of the working capital block happened. That's why the debt looks to have gone up, but that was largely because LME prices go up. So after a Q4 and Q1, a little bit of working capital block happens.
All right, we have understood most of the operational parameters as well as the balance sheet focus. But let's focus on another important aspect. Now, there is this fear that state governments will levy additional taxes post the Supreme Court ruling. If the state governments increase tax retrospectively and even prospectively, what could the impact be on Hindalco?
So our first part of the analysis is the retrospective bit. I think on the retrospective bit, because that can only happen if you have been served a demand. So we do not see any exposure on the retrospective bit. On the prospective part, it certainly we will be in the same boat as most of our mining compatriots, because if the state increase their royalties, then that will add to the cost of the mining. And hence, our cost structures will go up and ultimately the consumer will pay. So I hope that the increase in royalties are done in a more thoughtful manner is the only thing I can say.
Okay, that's going to be an important verdict, of course. I think we're expecting the outcome today itself. So let's see. It will really pave the way for royalty payouts, any payouts to the state governments once it comes through. So thank you for the clarification on that. Finally, sir, just want to clarify on Hindustan Copper as well. Now, here the stock price has been fairly volatile. So have you heard from the government of India on their intentions about selling any stake?
No, and I think that, last time it came, we bid, then that, not on the Hindustan Copper, but on 2 mines. And I think that probably what will happen is those mines again may get put up for mining, what they call a MDO with revenue shares. So we'll have to wait and see what happens. Whatever happens, we will remain very interested in them.
Okay, all right, Mr. Pai, thanks a lot for joining in and giving us all those details. So aluminum EBITDA per ton could come down a little bit, but hover around $1,000 per ton. Novelis will see a bit of a hit because of the flooding. Copper EBITDA per quarter will hold at around 600 crores odd. And interested in Hindustan Copper, but we'll be waiting by to see what progress and what the government has to say. Let's focus on the top stocks that we're looking at, and Vedanta as well as Hindustan Zinc. Both of them are on our radar. Why is that? Because everyone is waiting by for the government of India to go ahead and sell some stake in Hindustan Zinc. Well, Mr. Anil Agarwal's Vedanta decided we'll go first, and they have announced that they'll be selling stake via the OFS, close to around 2.6% stake, and the pricing is something that we'll have to wait by for. As of now, the shareholding pattern of Hindustan Zinc comes up for you. 95% plus is held by the government of India as well as by Vedanta. And you have 2% that's with LIC. So effectively, the free float in the market is only around 2% odd. What does Vedanta get? Well, for the 11 crore shares at current market price, well, they'll get close to around 6,400 crores. But it's likely to be at a discount, maybe around 5,500 crores is what they'll ultimately realize. Why do we say that Hindustan Zinc final pricing will be at a discount? Because the float is very limited, so that's why the stock is trading at elevated levels. On a valuation parameter, it's trading at around 13 to 14 times EV on EBITDA. Most metal companies are in that vicinity of around 6 to around 10 times maximum. So that's why the pricing will be a little bit lower. Impact, positive for Vedanta, because they'll be getting money, they can fund their capex, they can reduce debt. It braces them perfectly for maybe a rating upgrade as well. And also, they could look at paying out dividend. For Phillip Capital, they have put a number to it. They believe that it will be a 4 to 5% positive impact for Vedanta. For the time being, the stock is just mildly positive. There are some shorts in the system as well. So we'll keep an eye out on that. But good news for Vedanta.
Okay, all right. So that's 2 more stocks in focus. Vedanta as well as Hindustan Zinc. Let's look at Piramal Enterprises. Vamakshi is tracking a couple of brokerage notes that have come in on this stock. Vamakshi, tell us, what are they saying?
Well, absolutely. The company reported its numbers yesterday, and we have a couple of brokerage notes that have come through. CLSA has downgraded its rating to underperform and cut its target price to 860. They say that negative credit cost due to lower provisions as well as one-off gains supported the otherwise weak operational performance of the company. AUM did grow by 10%, and this was largely driven by 43% growth in the retail book. However, they highlight that some segments of its retail book are continuing to see a deteriorating 90-plus DPD trend, and they believe that this in turn could put pressure both on growth as well as credit costs. So given that, they've gone ahead and downgraded their rating on Piramal Enterprises. We also have another note coming in from Jefferies. They too have an underperform call on the counter, target price of 805. They say that low interest earning assets continue to weigh on the NIMs, but the OPEX to AUM still remains elevated. The company also utilized nearly 260 crore of its overlay provision in the first quarter, which in turn aided profit, but the core net profit was actually below estimates, and that is mainly on account of lower NII. They expect earnings recovery to be slow, and ROE is expected to stay below 1% and ROE below 4% from FY25 to 26. So overall, Jefferies as well as CLSA don't have a positive outlook on Piramal Enterprises.
All right, Vamakshi, thank you very much for that. News at the bottom of the screen. Gensol Engineering, JV with Matrix Gas, has won a bid for 237 megawatt hydrogen and electrolyzer manufacturing capacity under the PLI scheme. That is essentially what is coming through. Gensol, of course, is listed. Matrix is the unlisted subsidiary, which perhaps will also make it in the market by perhaps next year or so. But we'll see what the stock does. Let's talk about specific 9-10 trades a little after that now. Mitesh is back with us. Mitesh, what do you have?
I'll go with a buy on Berger Paints for target of 550.
Okay, Berger Paints, it's a buy, right?
Yeah.
All right, got it. Let's put the focus on SJVN as well. Vivek is here. Vivek?
Well, good morning. Very strong operational performance, like we mentioned earlier, on the back of higher plant availability and also gross power that the company actually generated. It went up higher by almost 56% on a year-on-year basis, 3.7 times on a sequential basis. 14% increase as far as the installed capacity is concerned, and PLFs coming in very strong at 63% versus just 46% on a year-on-year basis. All of that, what did that lead to? Higher top-line growth of close to 30%, EBITDA higher by 33%, margins very strong, 76.7%, profitability higher by 31.5%. Couple of things to watch out for. Number one, couple of key plants that the company has, waiting for commissioning on that. Number one is the Bazaar plant. Number two, the company said that they're looking to go ahead and monetize stake as far as LCAV and green energy is concerned. That'll be something that the street is looking forward to as and when it happens, and what kind of valuation that particular arm gets.
Okay, all right, got that. Vivek, thanks very much. SJVN in focus. Let's go back and look at the headline numbers for Apollo Hospitals. The stock will be reacting to earnings today. Ekta, fill us in on the details.
Well, yes, it was largely an inline set of numbers for Apollo, so no real big surprises which came in. Revenue was up 15%, margins 13.3%, and a profit which was over 300 odd crores. The hospital revenue, which is really the bread and butter for the business, is up around 15% for the quarter gone by, but the average revenue per occupied bed was still subdued. It was up around 2% as compared to around, say, a 12% growth in the previous quarter. Diagnostics margins improved to 9% versus 7%. Apollo Health Co. EBITDA was 22.5 crores versus a loss of 56 crores. Apollo 24 Q1 GMV was up around 9% on a year-on-year basis. Overall, I expect the stock to be in the green on account of these numbers because it was largely in line. No surprises came through.
All right. There's a minute to go for market open. Ekta, thank you very much for that. And there is a lot to track as far as the pre-open, as the market open is concerned. We have, I think, the pre-open rates, which will come up on the Nifty, just to give you a sense of where we are likely to start. And then I think we're not off to the races, but a decent kind of open after yesterday's 200-point sell-off. 45 higher on the Nifty is what we have at this stage. Mitesh, did we discuss Manappuram? Do you have any thoughts here? Okay, I think we lost the line with Mitesh. But I think we have too much time, so we'll have the countdown up, and we'll be looking at some of these names. Actually, that's Manappuram for you. Let's look at Muthoot as well, how it started, how it's sort of looking in the pre-open session.
Actually, still up 2.5%, despite those issues around higher provisions and all of that. But
yeah.
Pre-open, it's looking okay.
We already looked at Apollo Hospitals, Vedanta, Hindustan Zinc, we looked at as well. Nykaa is another one, right, which is going to be in focus, in Hero MotoCorp, where there's been a miss. So a fair bit to get through. The indices, the first rates in the indices up on your screen, and then we'll get into some of these individual names. So 24,172 is where the Nifty is at. It's a higher start. Sensex is starting up as well. That's 30 on the Nifty and 100 on the Sensex. That's positive start. Bank Nifty is starting about 50 points higher. We're at about 49,881 on the Nifty Bank, and almost immediately the Nifty Bank is slipping into the red. Nifty Bank is the weaker one, as we were saying earlier as well. HDFC Bank, of course, sold off yesterday. But even otherwise, I mean, 2-3 days of outperformance, and that's it. Bank Nifty has been back at the recent lows, unlike the Nifty, which has kind of pulled back a little bit. Nifty also is finding it difficult to sustain. I think that is also now almost in the red. Yeah, that is also slipped into the negative territory. Broader market is looking better. As you can see, the number of stocks which have opened up and opened down, it's almost some 4:1. Surabhi.
Absolutely. The mid-cap index, I mean, at the index level, it's not much, just about a 60-point gain. But if we talk about some of the key movers and shakers, look at the result reactions first. SJVN really stands out. The market is liking that performance, the improvement at the top line and the bottom line level. Nykaa has had a good quarter, no disappointment there. 3% up. Ashoka Buildcon is the other one. PTC India. These are all positive result reactions that I'm talking about. Gensol Engineering, we just saw that news flash on them looking at their plans with respect to hydrogen electrolyzers. That stock's up about 2% as well. Then it starts getting a little quiet. HEG is a big disappointment. Again, earnings related, so 5.5% down. MTAR has not performed as per expectations this quarter, 5% down there. Max Financial, 5.5% gone. So that's a big cut as well. These are all your negative result reactions. Hindustan Zinc and Vedanta are in focus, as the promoter Vedanta is looking to sell that stake in Hind Zinc as an OFS. So about 2% lower on Hindustan Zinc. And let's look at Vedanta. Vedanta is up about 1.5%. Market's very, very quiet. At the headline level, the Nifty is absolutely flat. Banks continue to be disappointing. But there are some other names as well. Hero MotoCorp, look at the cut on this one, 2.5%, disappointing numbers. So that's on the downside. And unlike yesterday, there's a bit of a departure from trend. Some of the FMCG stocks that were seeing green yesterday, they've started off slightly quiet. Nestle, Asian Paints, even Titan for that matter. These stocks on the lower side, absolutely flat this Wednesday.
Well, that's right. And flat is not too bad, actually, because, otherwise when you have a bit of a gap up, you've seen that the bears come in and they pounce out there. So for the time being, is as flat as can be all the indices, Sensex, Nifty, Midcap, as well as the Nifty Bank. But individual stocks are doing a thing of their own. Vivek told us about SJV, and the stock is flying away. One of the top volume gainers, up more than 5% in today's trading session. Ola Electric, massive volumes in the first 2 minutes of trade itself. Yesterday, it came off 10% from the high point of the day. For the time being, it's holding with a gain of around 1%, but massive volumes. Inox Wind, well, that stock is flying away in today's trading session, so that's up another 2% or thereabouts. Nykaa, the street likes the numbers, so the stock is higher in trade. That opened up, gap up with a gain of close to around 2.5%, so Nykaa comes up for you on the screen. Technocraft, very, very low volumes out there, but they've announced a buyback, small buyback. But for the time being, that was one of the top gainers in pre-open at least. So Technocraft should come up for you on the screen. Marksans Pharma, well, the numbers on an operational basis, there was some improvement. The stock ended lower with a cut of around 3-4% yesterday. Today, it's made all of that up. So I think it's up close to around 4-5% in pre-open. So that stock comes up for you. Ratnamani Metals, one of those big outperformers. Well, that stock, in fact, is giving back a little bit. Volume still lower there. The margins got compressed. It's a multi-quarter low margin. So that's why that one's down close to around 3%. Pyramid Enterprises is taking a sharp knockback in trade today. So that's one of the top losers. Now it's down close to around 5.5%. So it opened up with a cut of around 3%. Now it's down 5.5% odd. A quiet start to the trading session. Interesting times ahead.
Market breadth is flipped negative. There are about 1,100 stocks down on my screen, the more actively traded stocks, as compared to about 950, which are higher. And I think that should be true for the Nifty as well. This is, almost unchanged right now, almost on a holding pattern as we go through the motions of the trade today. And then, of course, tomorrow is a market holiday. There is, of course, also, I think the issue, global stuff has not mattered at all for the last many months, but it did matter last week with the US data, etc. And tonight you got the inflation numbers and the CPI numbers, which perhaps is going to be closely watched. In any case, here it's that uninterrupted kind of move that we've had in so many spaces, irrespective of whatever else was happening, that kind of has been broken a little bit for the time being. So it's quiet for now. Just a few more names before we bring in our market master. MFSL, that is Max Financial Services, is down 4%, and that is at about 1,008. Texmaco Rail is down 3%. MTAR Tech is down 5%. Keynes went up 9% yesterday. It is pulling back about 4%. HEG is down about 6%. These have all got volumes. There is Dilip Bilcon, which is down 3%. Phoenix Limited is down about 3%. Nazara Tech is another one. And Ahluwalia Contractors is down 8%. Although, I mean, volumes are not all that great on this one right now. V-Guard is coming up with an 8% pop. So 558 on V-Guard on the upside, which you have. Motherson is up 3%. This got lots of volumes, and you'll hear from the Motherson management a little later on the program. Oil India is up 3%. It's the second biggest volume-led gainer. And of course, SJVN, as we've already highlighted. Yeah, I mean, there's a fair bit sort of going on, but this is the bulk of it. Senco Gold, 7% yesterday. It's up another 4%, although volumes are a little lower for this point in the day. I mean, you got about 5 points to show for it on the Nifty at this point in time. We have Shreyash Devalkar, is head of equity at Axis Mutual Fund, to take us through what he's making of things. Shreyash, good morning. Great to have you with us here. Thank you for your time. Prashant Desai. So just take us through if anything has changed here in the market, a bit of caution over the last couple of days. What is it on account of? Have you seen any change in inflows that mutual funds have been getting, Shreyas? You would get a daily sense. Or does that remain as intact and steady as ever? Or this is just some global nervousness and foreigners selling? I was looking at figures, month to date, foreigners have sold some 29,000 crores in cash. Locals have bought about 27,000 crores. So almost sort of, dollar for dollar, rupee for rupee, however you want to look at it. Your sense, Shreyas?
Sure. So yeah, as you're highlighting, there's a combination of multiple things. So first, let's go back to the fundamentals here and probably valuations. So if you look at the way result season has panned out so far and sub-segments of it, then what we have observed is the result season so far has been in line more so rather than any surprises. Normally what happens is when the multiples are high, say especially if they're upwards of 40, 50, 60. At that time, either you need a story to expand further from one orbit to the next orbit, so to say, or you need continuous upgrades in the earning. At this juncture, in this result season so far, actually the upgrade in earning is not seen much. Though the earnings growth is in line, I don't think there are much disappointments per se, but lack of broad-based upgrades is definitely one challenge which market faces when the multiples are relatively high. So that definitely is one of the key elements which is more fundamental in nature. When you talk about the global factors, and among those, definitely the US remains the key factor. So the expectation of immaculate disinflation to recession. So there is a dichotomy in this, and that's where entire sentiments around this are changing with every data point which comes from US. For our market, especially what matters again on the fundamental side is if there is a recession or a sharp slowdown, then definitely a part of our economy, part of our indices, their earning growth definitely depend on the US, because most of our exports, especially on real estate space, is to the US or the associated economies. And that's where that part definitely has some impact on on the market as such. As far as domestic flows are concerned, actually they have been one of the highest every month after month, and actually almost 20-25% of financial saving is actually coming to the equity. If you count everything, not only the mutual fund, but the mutual fund, insurance, and direct equity, and so on. So if you count everything, then actually it is a sizable amount. Probably when it comes to that amount or as a percentage of overall saving, that number is very high now. So absolutely, obviously, one may not expect too much correction, but to expect that it will keep on increasing on that is also one of the challenge which may come in near term. And what we have observed is that when there is a based on again the historical observation that when the returns are great on a 1 year basis, then the flows are normally good. And when the returns on 1 year basis they turn flattish to negative, then it has an impact on flow. So till now we are not in that situation, but generally the flows have impact of fast returns.
Okay. Shreyas, hi, good morning. Good to have you on the show today. So just take us through the strategy from here on. I mean, for all the incremental money that you're getting, and there's no stopping that, right? Because investors are still piling up funds into mutual funds. So from a sectoral standpoint, say, are you still comfortable buying the economy-facing themes, whether it's capital goods or whether it's defense, etc., manufacturing, despite the run-up? Or are you looking at newer ideas where we haven't seen a run-up in prices, say maybe banks or perhaps FMCG? What is the portfolio stance incrementally from here on?
So again, going back to the earnings season so far and the management commentaries so far in multiple sector and subsectors. So in this, generally, if I go back to one of my comment on the US and their recession or sharper slowdown, in that scenario, our stance has been that we have been cautious on exports. May it be IT services or it may be through another capital goods export or auto ancillary exports. So broader segment of exports is what we would be cautious on. While when it comes to opportunity, definitely the industrials and the capital goods part of economy continue to deliver great numbers quarter after quarter, month after month after, for now almost 14-15 quarters. And these numbers are definitely superior than the broader market. Because of that, obviously, the multiples have reached where they are. And as I commented, when the multiples reach more than 50, 60 P, then you need a orbit change or you need continuous earning upgrades. Probably both of them are lacking. And that's where probably one need to be parking their thoughts or be cautious on that side. Definitely, as you highlighted, on the other side of the market. So there are three segments which has not seen substantial re-rating. One is, as you highlighted, FMCG, private sector banks, and thirdly, IT. It has got re-rated, but re-rating is not substantial compared to the broader market. So one need to identify opportunities among these. What we have observed is, again, going back to this result season, few things probably have changed on the consumption as far as management commentaries are concerned and the earnings are concerned. So after a long time, after a gap of almost 3 to 4 quarters, actually consumer discretionary or consumer electronics, consumer durable, this pack has delivered good numbers in this quarter with good commentary so far. The another observation is also about rural India. So probably few quarters ago, out of 10 companies across the board, right, from FMCG to two-wheeler, if probably 1 or 2 or 3 used to call out that, yes, it is bottoming out and there is change in trend. But now probably in this result season, when you get to the management commentary, then out of 10, more than 5 are talking about this. So that is also, there is some subtle change which is observed in the management commentary. And that's where one need to also focus and evaluate this into further detail. So there are changes. So when it comes to risk reward, definitely the risk reward has to be found out in the places where there is earning, where the P rating or the price to book rating has been lower. So out of this pack, definitely one need to delve into more incrementally.
All right. Okay, Shreyas, appreciate you joining, and thanks a lot for joining and giving us your view on the markets as well as on all the sectors we discussed. By the way, just keep an eye out on Max Financial. That was one of the biggest losers, in the first few minutes, but it's seen a recovery from the low point of the day. And that's because of the commentary they're giving in their con call. So we've seen a bit of a bounce, and those flashes are telling you the picture. The Q1 margins are generally subdued. Q1 margins are generally between 17 to 21%, but they're saying as they proceed into FY25, they see that the margins will improve, and they're very confident about that. That's why the stock, after hitting a low of, I think, 985 odd, post this positive commentary, it's seen a big uptake from the low point of the day. And Yash, my colleague, is on that call, so he'll join in and give us further details. But that explains why the stock has recovered a goodish bit from the low point of the day. So keep an eye out on that. But let's focus on Manappuram then. They registered a 15% growth in the gold loan AUM and have guided for 15% loan growth going ahead. The company's non-gold loan AUM as well saw a healthy growth of nearly around 30% on a year-on-year basis. To help us out with the way ahead, we're joined by Mr. Nandakumar, the MD and CEO at Manappuram Finance. Hi, Mr. Nandakumar. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, let's get a couple of those basic numbers out of the way. The gold loans, well, you're guiding now for around a 15% growth. Could you tell us, break it up for us, where are you seeing this growth rate? Is it going to be higher penetration? Is it going to be top-ups? Or will it be client addition? And also, what is the growth you're guiding for on the non-gold loan AUM?
See, the gold loan growth is coming from our target audience, which has gone down because of COVID, and it took time to come back. These are small ticket loans of around below 1 lakh. Who usually avail for a shorter period of 100 days, 120 days, etc., etc. So that segment, the demand has gone down. It is slowly coming back. So that is the reason why we are getting growth. As you have said, it is not due to top up. It is not due to top up. So it is not dependent on the price also, because people want money. To that extent, they bring gold. If the gold price goes down, collateral increases. That is the general scenario. If the gold price goes up, collateral comes down. It is not dependent on gold price. It is dependent on the demand who are mainly from these small farmers or small retailers, small cottage industries, etc. These are the major segments coming for availing gold loan for their shorter working capital requirements.
Okay, so Mr. Nandakumar, 15% growth is what we're seeing on the gold side. I missed the non-gold side. How much growth should we expect over there?
Non-gold, we expect these are all small base only. So we expect that to be around this. Other than microfinance, we expect a growth of around 30-35%.
Mr. Nandakumar, hi, good morning. Prashant here. Good to have you with us here on the program, sir. Now, on the non-gold side, right, especially on the MFI side, is there, I mean, obviously it's small numbers as compared to the gold portfolio, but are you seeing stress building up? We've seen a few other pure play microfinance companies reporting a fair bit of stress. And that's kind of sparked off alarm bells whether it's going to be an industry-wide issue. So could you talk to us about that?
So it appears an industry-wide issue because there were reasons for that. One is because of the terrible heat conditions across the country. Our customers lost, the MFI customers lost many mandates. Their earnings were impacted. Then again, because of the general election. Another factor is in many places, farmers' agitation like Punjab, Rajasthan, and some parts of Gujarat. It is not completely across the states, some part of the states. So these situations have impacted that. After all, microfinance has its cyclical challenges. And what usually is the scenario when the situation becomes normal, these customers generally come back and remit because this is very important cash flow for these customers. Very important when they plan their requirements like children education or similar requirements. So this is a great source of comfort for them. So they used to come because they don't want to lose their CAC score, etc., which will prevent them from availing loan from anywhere. So,
Sure.
For MFI, will credit costs go up?
I think it has come to a peak now. It has come to the peak now because the situations which has led to some stress in that particular segment.
That's behind you now. Things should get better, you're saying, on the MFI side.
Come back. It should come back.
So, Mr. Nandakumar, sir, good morning. So, just to understand this, for Ashirvad, the gross NPA levels actually improved. Though you're describing some of the, the stress in the industry, I think your gross NPA level moved from 3.7% in the fourth quarter to just about 3% in the first quarter. So can you give us a business outlook? And you said that X of MFI, the rest of the non-gold portfolio will grow at 35%. But looking at the market dynamics, what is a realistic expectation in terms of growth for Ashirvad MFI? And also some guidance on asset quality. Will it remain stable at 3% GNPA? Could it get even better if the worst of the credit cost is over?
I am constrained because we are in a DRHP stage. So whatever has been published only on the basis of that only I can discuss. So other than that, I can make only some general statements. I am constrained to give company-specific details beyond whatever has been published because of the DRHP status.
Fair enough. Sir, just what is the progress? I mean, IPO timelines, what are you looking at?
The roadshow is going on. So generally, for our IPO, we feel a positive sentiment. So the IPO is only half through. We will decide on that only after completion of our roadshow in another 2 weeks' time.
So within 2 weeks, we'll know about the timing of the IPO. Is that correct, sir?
Yeah, that's right, sir.
So before Diwali, we'll see the IPO hit the markets?
All depends on the market conditions. See, valuation is important. Definitely, as the promoters, we have some expectation. It's all dependent on how the valuation would be.
At least in this calendar year, it will get done, right?
That is the expectation. With that expectation only, we go for the roadshow, etc., and we showcase how we are unique in many respects, etc.
So you said valuation is important as promoters. We absolutely understand that. So the conversations that are happening in the road shows, do you get the sense that you will get the valuation that you're seeking?
Yeah, so we showcase what is our unique thing to the market. Based on that, we see interest for the investors. So we hope the things will be better in the coming months.
Okay, all right.
Coming days.
Okay, so let's keep Ashirvad aside because as you're saying, you're gone into that silent period. But X of that business for the standalone gross NPAs, net NPAs, credit cost, give us some guidance on those numbers, sir.
See, in MSME sectors and vehicle finance, there is slight increase. There is very slight increase. That also has, we feel like that has peaked up. It will come down. That also is on account of the situations, what I have told, like the extreme heat conditions, people losing working days, etc. Then election, then the challenges we had. Now, as these are behind, we feel like it will go down.
Okay. Final question before we let you go, sir. You're not giving us any numbers, but you're saying that you expect things to improve from here on the asset quality front. So we'll take that, Mr. Nandakumar. I'm looking at your cost of borrowing. That's perked up a little bit. Could you tell us whether or not that has peaked out? And you've also changed your borrowing mix. What is the outlook on this front? And in turn, what kind of impact will it have on your margins?
Yeah, as per the guidance from the regulators, etc., we diversified our portfolio. We try to diversify our portfolio. Yeah, our dependence on the banks we want to reduce. As a step towards that, we have raised 300 million US dollars, which are listed in Singapore Stock Exchange. So that because of the higher hedging cost, etc., the overall price cost was slightly higher. That is the reason why it has the average borrowing cost has gone up. So even at at this cost, we have the plan to borrow just to diversify our portfolio.
All right.
Yeah.
All right, sir. Thank you very much for giving us all of the details there and the context on the business. We wish you all the best for the rest of the year as well as the Asirvad MFI IPO. Look forward to hearing more on that. By the way, before we move on to the next management conversation, Apollo Hospitals, just bear in mind that there's a big sell-off in the mid-cap market that's underway. The Nifty is fine. Nifty's at the flat line. Bank Nifty is okay. But there's unwinding going on in the mid-cap space. That index is lower by about 0.7% right now. But back to more corporate conversations. Apollo Hospitals is in focus. The company reported an inline set of numbers for the first quarter. The margin expanded. Occupancy also improved year on year. But there was a slightly slower growth in terms of the average revenue per occupied bed. To talk more about this, we have with us Ms. Sunita Reddy, MD of Apollo Hospitals. Ms. Reddy, great to have you with us. Thanks so much for joining in. I'm just going over the numbers for the benefit of our viewers. Your revenue is up a little over 15%. EBITDA has grown by nearly 33%, and margins have seen a big improvement, 13.3%. And obviously, the profitability is much better as well. Let me start with the margin, 13.3%, and the various levers that led you to this number. Is it sustainable? And then take us through the trends in terms of the average occupancies which have improved, and also the ARPOB trends that you project going ahead.
Okay, let's start with the margins. I think the margins are not only sustainable, but they will improve. If you look at healthcare, where we had 2,867 crores of revenue and 622 crores of EBITDA, clearly our margin there is 23.6%. And going forward, we will see improved margins because we are focusing on case mix and cost as a lever. So clearly, there is room for margin improvement. If you look at Apollo Health and Lifestyle, they had a revenue of 336 crores and a margin and 31 crores of EBITDA, margins at 9.8%. And here again, there is room for improvement because the diagnostics is growing by 15%, and that is a high margin business. Spectra, which is a daycare, 23%. And Cradles at 18%. So again, huge scope for margin improvement in this vertical. Apollo Healthco has, the digital business has grown by about 15%, and the offline stores have grown by 11%, leading to a margin of 7.6% in the offline, the pharmacy supply business, which is really growing. And digital is doing well and on track for break-even. So they keep 3 crores of EBITDA, and going forward, they've cut their losses from 150 crores last quarter to 115 crores. So net EBITDA of 23 crores.
Ms. Reddy, you're sounding very, very optimistic, and you've elaborated on how a lot of the other businesses, how they've really fired up, leading to this margin performance at a time when actually ARPOB has been a little on the softer side. So since you're so optimistic and you're saying there will be further improvement, can we get a rough sort of range that you may be targeting or keeping in mind? I mean, is it possible to say, look at even 15% by the end of the year? Or am I being too over-ambitious here with the number?
No, you're looking at blended margins, and I'm actually split it. But if you look at the hospital space, we're quite confident that there could be another 100 basis points improvement in margin in the next 4 quarters. So clearly, we are focusing on that. And with Apollo Healthco, they are, by cutting losses and really growing offline, they could look at better EBITDA performance, which they're on track for. And again, like I said, Apollo Health and Lifestyle is getting better. They're growing 3 verticals, which is the daycare, the cradle, and the diagnostics. And we're seeing above 20% growth in all of these verticals.
Ms. Reddy, hi, good morning. Prashant here. Good to see you back on the program. The average revenue per bed, ma'am, the growth was about 2% on a year-on-year basis. Could you sort of tell us, did that fall short of what you were expecting? Any reasons, and what should we expect here?
No, so if you look at the mix, 36% of our volume cases were surgical, contributing to 51% of our revenue, and the rest were medical cases. So the ARPOB did not increase, but going forward, electives should improve. It was a very sharp summer in election season. So, this was expected. So we had more medical cases and surgical cases.
Got it. Any guidance here for the full year, ma'am?
I think that you can expect to see a 7% improvement in ARPOB for the whole year.
Okay, 25 over 24. Apollo 24/7's GMV grew. It grew about, I think, 8% year-on-year, about 2% on a quarter-on-quarter basis.
Yes.
Again, what should we expect here?
So I think, it grew 9% year-on-year. And the focus is really reaching that number. It's at close to 700 crores. They are, by the end of next year, will be, each quarter they will be doing close to 1,200 crores. So they are on track. They have several lines of business that will continue to contribute to both revenue and margin.
Okay. Ms. Reddy, I don't know if this number is shared or not, but a breakup will help. The percentage of the revenue that comes in from the higher end surgeries, you said the mix was more on the medical cases side.
Yes.
So where are you now, and where do you see this number heading as, we see more advancement in medical science?
So about 54% of our revenue is coming from 36% volume of surgical. And this quarter we had a lot of medical cases. So going forward, a lot of elective surgeries are planned in the next quarter.
So right now, you said 54% of the revenue came in from the medical cases. Is that right?
Yeah, it came from the surgical. The balance came from medical. And it's usually higher from surgical, but because of the elections in summer, it was slightly muted there, which is why the ARPOB grew by only 10%.
Okay, and ARPOB you've guided for a 7% improvement over the rest of the year, right?
Yes.
Okay, just a word on Apollo Healthco. Here we're looking at an EBITDA of over 22 crores. The losses are a thing of the past. How do you expect the business to be, and what are you expecting on the digital side going forward?
Well, I think we're going to see very strong growth. They, of course, have 3 streams of revenue. The 4th, which is insurance broking, should start in Q3. So right now it's pharmacy online, it is teleconsults, and it is diagnostics. 3 of them are contributing. So the conversion of GMV to revenue is currently at 35.9%, and that will move to 44% next year. And when that happens, they do become profitable. So they are on the road to profitability.
Got it. Ma'am, we'll leave it there. Thank you very much for your time, and good luck to you and your team as you continue to execute on some of the numbers that you've laid out. We'll take a quick commercial break here. We'll come back with the manager of Motherson. 25 points higher, by the way, on the Nifty. We're at about 24,165. That's the next conversation coming up. Okay, welcome back. As promised, let's focus on Samvardhana Motherson now. First quarter was a slightly mixed one, with EBITDA margin coming in slightly below street expectations. Revenue growth was healthy though. Gross debt increased in the quarter gone by as well. We'll talk more about this. We have Pankaj Mittal, Chief Operating Officer at the company. Kunal Malani is CFO at the company. Gentlemen, great to have both of you here, Pankaj and Kunal. Appreciate you joining in. Kunal, if I can come to you first. Revenue growth has come in at 29%, and it's better than what the street was expecting. But you mentioned that this is despite muted industry volume growth. Can we begin there? I mean, what do you mean by that?
Look, the industry volumes were pretty much flattish across the globe. Having said that, you had Europe and US, which were slightly down versus expectations at least. Europe was around about 7% down. But it was made up by India and China, and that's the benefit for a player like us by being diversified across so many geographies. A lot of, let's say, volatilities around certain countries and geographies or products and customers gets muted in Motherson because of the sheer diversity that we have, and hence it's a much more resilient model, if I were to put it. And that's what you're seeing, that in spite of muted volumes, we've been able to deliver pretty stellar growth.
But if industry volumes stay this way, you have to work doubly harder, right, to kind of outperform. You don't have that tailwind of the industry. What does that mean for the overall growth for the company for the full year?
Difficult to predict in that sense, because there's obviously unclear picture in terms of which parts of the world will do what. There is a degree of softness that is being seen in Europe right now, largely on account of how EVs are getting, the scale of or the growth that was expected in EVs is getting muted a bit. And that's largely causing the impact. In fact, on the ICE side, we are seeing an elongation of the existing programs. Hybrid seems to be catching a lot more interest and seems to be the highest growing segment right now, pretty much if you look across the globe. So all in all, I think the content part of it continues to grow. There is more SUVs being sold. There is more premiumization that is happening. And hence, for someone like us who is more positioned in that set of the market, we continue to see growth. We have 83.4 billion order book to be executed. So in some way, we may have gained share, not that we track it, but we may have gained share. And hence, that may also augur well as we move through the year.
Pankaj, just to sort of talk about this issue with the container costs, I believe this has been a bit of a dampener as well. I mean, do they still remain as elevated, and what is the outlook, and what could be the potential business impact if these rates remain where they are?
Well, thank you for having us on your show today. For us, we are a very well-positioned company because Motherson has its plants in the same geographies where the customers are located. So we are not a big exporter of products from one country to another, and that puts us into a very big advantage. The container issues do lead to some of the child parts which move from one country to another, and it's a global world supply chain. So that they may lead to some inventory buildups of the child parts, but majorly for us as a company which has its plants in Europe and China for China, North America for the North American region, South America has its plant in South America. So we are very well positioned, even in these disruptive times, to be a reliable partner to our customers.
Okay, so could you give us, I mean, since this is not something that seems too bothersome for you right now, but, in light of what Kunal also said in terms of Europe demand and EVs being a bit soft, how is the rest of the year looking? Some sense in terms of just top-line growth, revenue, whether it's going to be, a flatline sort of a situation that we're looking at, or whether you'll manage 15-20%, some sense.
See, Motherson has evolved to be a very diversified and robust company. So that's reflected from our results. You would see that financially also in these very uncertain times, very difficult to predict. But what is more important is to have financial prudence. And we have maintained that with a leverage ratio of 1.5, despite large M&A payouts and also growth capex. So we are growing and setting up new facilities, greenfield sites in developing economies where the growth is coming. Also in the developed markets, if we see the movement of the vehicles, it's towards upscaling. So the premiumization and SUV trend is growing. It's growing both in the developed market as well as in the developing markets. So they are also helping us in the growing the content per car. We, being an acquisitive company, believe that in uncertain times when larger capacities would be available, extra capacities are available, there would be more options for us being given by the customers to look at even more M&As. So that's the direction. So when you look at it, and not just the automotive side, the company is also growing very well in the non-automotive business as well. So in a diversified platform, we do see a very good future coming forward.
Hi, Pankaj and Kunal. Good morning, and thanks so much for speaking to us. Let's try to get some quantitative numbers out. You know, we have got the qualitative aspects. So you mentioned that maybe inorganic growth is something that you're looking at. You'll have a capex spend, I think, of around 5,000 crores for the year. So tell us, what kind of debt levels are you all comfortable with? As of now, the gross debt is around 20,000 crores. The net debt is around 13,000 crores. So how comfortable are you all with regard to this debt number, and what is the outlook from here on? And also, your working capital days got a little bit stretched in the first quarter. Where does it normalize at?
So one, I think we're very comfortable with our current debt levels. Our financial policy is 2.5 times net debt to EBITDA. We are at 1.5, which has traditionally been our comfort levels. And hence, this is not really a challenge for us because you've got to see the aggregate debt in the context of the size and scale of the business as well. Where we see the business heading towards, I think with whatever that we know today, we should still be deleveraging. The working capital expansion that you saw was partly driven by the Red Sea crisis, where we had to keep some of the extra inventories in place, partly driven by volatilities in the customer production schedule because supply chain was a bit disrupted. And hence, and then there is a large order book of 83 odd billion plus, which will come, part of it which will start coming into SOPs in the latter part of this year, for which inventory has already got built up. And hence, in the latter part of the year, we should see working capital getting more normalized. And that should again release cash from the perspective of how our debt looks like, besides generating the profits and cash flows during this period as well. So overall, hence we believe we should deliver from 1.5. I would estimate this to be somewhere around the 1x levels, give or take, or maybe even better, depending how things play out. So debt really is not a concern. All of this is obviously keeping in perspective the announced transactions only on the inorganic side, and nothing new that has been considered in these estimates when we look forward.
But some new transactions are coming. That's the hint that Pankaj was giving us. Pankaj?
Well, as Kunal said, also that these numbers which he's giving and deleveraging of our ratios is going to happen if the new acquisitions, because we being acquisitive company and being a reliable partner to our customers, there are a lot of options and opportunities which are being provided by our customers.
So there is, I mean, you're telling us that you are looking at newer targets?
Always Motherson has been, yes, always Motherson has been provided with many opportunities. We evaluate them very carefully. And if they are good for all the stakeholders, we go ahead with them.
I mean, you know, I was thinking that lots of acquisitions at maybe 5, 6, 7 years ago, one would wonder, well, how are you going to do, how are you going to sort of combine all of them and sort of bring it to fruition in a very productive way. But one of the things that you said, Pankaj and Kunal, it really struck a chord that the world is actually a very different place now, right? And having manufacturing plants in countries where you got to supply the product to becomes important. Because, I mean, tariffs are going up around the world, especially in the US. I mean, I think the direction of travel on tariffs is up, not down, everywhere pretty much. And in that sense, you're sort of well distributed. So that's a good thing. But nothing, you'd announce something new in this over the next 3-4 months, Pankaj, possible? And how large, if you can tell us?
Well, acquisitions are such a thing that till it happens, one can't announce or say anything because it has to be value accretive to the stakeholders. And we continue to work together with all the partners all the customers to find solutions. So that's how we all are. So the moment something fructifies, we will be announcing it.
Okay, all right, Pankaj and Kunal, thanks a lot for joining in and giving us those details. By the way, just keep an eye out to the bottom of your screen. We have some important flashes that are up, and Dabur is the stock in focus because the ED has issued summons to Mohit Burman of Dabur. The summon to Burman is issued as part of its probe into Religare open offer case. So explains why the stock has now suddenly seen a bit of a dive on that one. We'll try to get in Timsy to give us further details, but that's one of the reasons why, in fact, the stock has seen a bit of a downtake. It opened up in the green, but it's lower as we speak.
I mean, it's that battle between Religare and the Dabur promoters. I think the Burman family, the Dabur promoters right now owns a little over 25%. And there is that open offer which they'd like to launch. I think the last price which was offered was about 235 rupees for Religare. I think it got the CCI approval. It got and of course, I mean, there have been other regulators who've been weighing in as well in different ways, not on the open offer per se, but the SEBI weighed in, SAT weighed in, IRDAI weighed in with regards to some of the ESOPs which were issued to Ms. Saluja, who's of course the chairperson at Religare right now, asking her to return the ESOPs in CARE. CARE, of course, is the standalone health insurance business, which is part of Religare. And, Religare derives majority of its value. It's like a holding company. It derives majority of its value from what it owns in CARE. So it's a developing story, and we'll talk more about this one. Let's look at the other one as well, which is Religare. And what this could mean. But as Nigel said, more with Timsy as we go along. We'll take, I think, a quick commercial break in a bit, but Mitesh is with us with what he'd like you to do now. Mitesh, good morning again. How are things looking? We've got about a 10-point cut, so neither here nor there.
Yes, Prashant, I think not much happening on the index. In fact, the Bank Nifty also went down and has since come back again. So my idea is to avoid that. Look at stocks. I think Tata Consumer is something, which I would recommend sell upon. And I would recommend a sell with a stop at about days high of around 1185 and look at a target of around 1130 here. And the other one is sell on SRF. I think that's breaking down as well. So SRF is a sell with a stop at about levels of 2515 and a target of 2420 can be looked at.
Okay, all right. Thanks very much, Mitesh, for that. So those are some trades. Market quiet and flat, really, just about 8 points lower. But, as we take our next break, here's remembering a veteran investor, perhaps the biggest bull on India, Rakesh Jhunjhunwala. He left all of us, all the well-wishers, and of course the millions and millions of investors who've heard him over the year. Today is his death anniversary. And of course, the Lal Street, the entire investing community, the trading community, keeps missing him dearly, but of course we remember his spirit and his sort of big thrust on the India story. India is the stock you need to invest in. That's what Rakesh always said.
I mean, especially during times of crisis. I think, if you remember those interviews during the peak of the COVID crisis, I mean, him coming out and sort of calling out the fact that the market is looking good for the long term. And you should be bullish on India. I mean, I think those were times that you remember, especially that you needed that courage. There's a lovely tribute by the family which has actually been put out, and the one line which stands out from that is him saying "Darne ka kya." It's a life well lived, really quite something as an inspiration for the millions of, actually billions of investors now out there in the market. So we'll take that quick commercial break, leaving you with some pictures here. Stay tuned, we're coming back with more.
Welcome back. Plenty of stocks on the move, so let's go over them. Yash is tracking the fall in Max Financial. Yash, so disappointing earnings?
Well, the numbers were disappointing as far as the value of new business part and the margins are concerned. Top line was largely in line or ahead of estimates. So as far as new business premium for the company in the first quarter is concerned, that was in line with CNBC-TV18 estimates. Total APE was in line with CNBC-TV18 estimates, as well as the retail APE side, it was in line. What got the street on the disappointing side was the value of new business. That came in at about 254 crore rupees. We were anticipating a number of 285 crore rupees. The margins, another disappointing part, which came with a big gap down at 17.48% versus estimation of about 21.46%. So a gap down of almost 400 basis points is what caused the biggest disappointment as far as the stock performance itself is concerned. The margin miss largely came because of two reasons. One is the ULIP share out of the total product mix going significantly higher and the non-par share coming down. So ULIP share went up to 39% of the total product mix versus 25%, and non-par came down to about 22% versus 31%. The management just addressed the earnings call. They've said that the margin numbers in the first quarter are generally lower, between 70 to 21%, but they trend higher as we proceed into FY25. So that should give some comfort. But the stock has rallied significantly in the last 1 year, about 29%, 11% in the last 3 months, and that explains why on the disappointing margin performance the stock is down today.
All right, Yash, thank you very much for that. Recovered from the day's lowest point, but still a little soft. Hero MotoCorp is the next one we're focusing on. Sonia is here. Sonia, good morning.
Good morning. Thanks a lot for that. Well, the stock is under pressure because of a couple of reasons. Post the numbers, you realize that there are higher raw material costs which have actually impacted the EBITDA margin of the company. And the realizations have actually seen a very minor increase of just about 2% on a year-on-year basis. So if you look at the numbers, they are below what the street was estimating. The revenues have come in at about 10,144 crores, below street estimates. EBITDA as well at 1,460 crores, below what the street was estimating, and the margins as well at 14.5%. Now, the management commentary is that they did witness positive trends across the domestic EV as well as the global business. They are optimistic about the demand trajectory for coming quarters, but they also see inflationary pressures that continued in the quarter gone by. Henceforth, inflationary pressures are easing and the consumer spending power is picking up, so they are optimistic on that. Brokerages, Jefferies has a buy call with a target price of 5,650, but I think it is the impact that the higher raw material costs have had on the margins, which is having a reflection on the stock as well. Back to you.
All right, Sonia, thank you very much for that. For now, let's just go back to the big story around Dabur and the summon being issued to the Burmans. The stock has been under slight pressure. Of course, the story is that, and this is for sources saying that the ED issued summons to Dabur's Mohit Burman, and this goes back to the Religare open offer case. Timsy has more details. Timsy, what is the latest that you're picking up?
Well, yes, as you rightly mentioned, that this matter pertains to Dabur's open offer in the Religare matter. Remember, Mumbai police had registered an FIR based on which ED is investigating money laundering charges. And what we hear from sources is that last week, Mohit Burman of Dabur was called at ED Mumbai. He was summoned and then statements have been recorded. So let's see what is the outcome that comes out of these statements, etc., that have been recorded by ED, how the investigations pan out in future. We'll keep you posted. But yes, as of now, summons issued, statements recorded.
Right, Timsy, thank you very much for that. We'll keep you posted, as Timsy said, about what happens from here on with that case. We'll take a quick commercial break here. On the other side, it's a special segment, Indianomics. My colleague Lata will be speaking with C. Rangarajan, former RBI governor and the author of the 1991 reforms that focus on India's growth story and the path to Viksit Bharat. Stay tuned. Special conversation coming right up.